ForexDayBreak podcast.
Good morning and welcome to episode 110. Forex pairs in this episode are EURUSD. There's more upside. We try to catch the move higher. Dollar yen, we see a reversal happening soon. We try to catch that move. And pound dollar, the prices are back on the upper part of the trend line and we try to catch the reversal here. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Hello and welcome to the show. This is Forex Daybreak daily podcast with me, Ville Vainio. And we have one single trade today. So yesterday's predictions didn't play out actually. So today we have a one trade in EURUSD and it is a buy stop order. So EURUSD buy stop at 109.115, stop loss 108.65, take profit 109.7. And the trade is visible in the chart. So yesterday I was thinking that we have completed the very complex, very long sideways fourth wave correction, but now it seems that this was premature and the correction is still in force. So then we can expect a little bit more upside on this pair and we are trying to trade this one final move higher and try to catch the last pips of the correction before next impulsive structure, next decline can start. So actually let's draw it here a little bit. So yesterday from the high of 109.67 I was thinking that we have started the next impulsive wave down. So the expectation was that we were forming the fourth wave yesterday and we could expect a downside move, but this wasn't the case. We had more upside and now I'm thinking that we can expect a five-wave structure for the C wave, perhaps towards 110 level, maybe near 110. Even our take profit is at 109.7. So as this is a C wave, it should be a five-wave structure which should conclude the Z wave, the last part of this very complex minor wave 4 correction, which has been going on for a couple of months now. After we have completed this correction, then we can expect the next impulsive wave down. And like I have talked before, new short-term lows below 107.1, below mid-term lows 105.2, and even below long-term lows, which is at the moment 104.6. So once we see the reversal and the decline can start, then of course there's very good trading opportunities. Impulsive waves are much easier to trade than corrective waves. Of course, there can be of course good trading opportunities on corrections as well, but still we prefer to trade the impulsive waves. But once this correction still goes on and on, we need to make some pips or try to make some pips out of this market situation. So now the expectation is that we should see one more corrective wave or five-wave structure as the C wave to the upside to complete this very long, very complex correction. All right, let's move on to dollar yen. I have still no trades in here. I just like to update this. And if we expect euro strength on EURUSD, maybe we can expect dollar weakness in this pair as well. We are now around this 61.8% Fibonacci retracement level, the area is around 128, 129, around there. And perhaps we have now completed the D leg of the triangle. Still too early to say. If we see a reversal here or more downside, then of course this is a much more stronger case that we have completed the D leg of the triangle and can expect one more move lower towards 116, maybe even a little bit lower than that. And this would conclude the very large triangle formation and start the next phase of the correction. These triangle formations can be hard to trade, of course, now since the Bank of Japan lowered the interest rates in negative territory. We have this very sharp move higher, a 300 pip move. But if you look at the other price action around this triangle, it has been very choppy, very difficult to trade, very nerve-wracking to follow the trades when there's up and down motion. The good part of the triangles is that they are very reliable. The targets for the trades can be very accurate. So if you just have the nerves to trade, these corrections or triangle formations can be very nice places to trade, at least when they are this large. The size of this triangle is very large. So once we see a turnaround here, we might see more upside towards the upper trend line of the triangle near 122.5. And if we get into those levels, then there is a very good opportunity to take a short trade here and trade the last leg of this triangle down. We have tried to trade this every now and then, but not very good results has been witnessed here. But if you like to trade this, maybe now is not the good time to enter any trades. I would like to see a resolution here if we get more upside, or if this is the peak of this leg and we can expect the next leg to form to the downside towards 116 levels. All right, let's take a look of a couple of other pairs. Pound dollar. So here we yesterday looked at this triangle formation, and now there has been a very strong move higher. Pound has strengthened quite a lot, and we have again gone higher towards the 144.77 level, which is the upper part of the previous fourth wave. So now the correction is getting more complex and we need to adjust the labeling. So perhaps we see a triangle as a wave, a W, and then the sharp move downwards as the X wave, and now we can expect maybe a little more upside here, but I think this correction is at later stages. Maybe we will get towards 145 or thereabouts. If this continues strong, it would have been very nice triangle formation to conclude the correction. And since we had a very strong move downwards, this was strong signal that the correction was over and we should see more downside. This was not the case. We have gone back up and are now very near of the upper part of the triangle trend line and getting a little bit of resistance there. If we extend this line, we can see that these two resistance levels are holding up the price right now, and the strong move has stopped there. So this can be perhaps the end of the correction, but if we take correlation to EURUSD, perhaps we can expect more upside. But we will keep an eye on this pair and try to catch the reversal and trade the last fifth wave down. There's a 350-400 pip potential if we get on early onto the last wave down. All right, let's see euro pound briefly. Price action here is not looking very impulsive, so perhaps the latest high, which is at 0.7754, perhaps this is not the end of this corrective structure. We are forming a very complex large sideways correction, intermediate wave B in my labeling, and perhaps it is not over yet. The decline from the high, if we draw it here, the decline is in 3 waves. So clear 3-wave move lower, now perhaps a triangle. And maybe we can expect a 5-wave structure to the downside, but then maybe one more move higher is needed in order to complete the larger structure. Since we have a 3-wave decline, this whole structure should be treated as correction. And now the sideways nature of this price action is signaling that this is a B wave rather than an impulse or correction in impulsive structure. So let's see how this develops. Maybe we get a little bit more downside if there's more pound strength coming in today and in this week. So maybe we can expect a more downside and perhaps then one more wave higher, perhaps towards 0.78 levels. But this large correction is at later stages, and once we see the reversal, there's going to be a lot more downside to be expected in Euro Pound. Okay, that's all for today. Subscribe in YouTube to get these videos, and I will see you tomorrow. Bye bye.
ForexDayBreak.com.